Powell's Tai Chi magic shocked the market, and Bitcoin staged a deep V bungee jump. The futures market is cooling down, and there are hidden mysteries. Is Bitcoin's run to 130,000 even more terrifying? SEC encryption with a single wave of your hand ETF from voucher to money withdrawal machine in seconds. Do you understand this move? NFTs sudden zombie-like rebound. Is it a last gasp or the beginning of a real bull market? NFTs sudden zombie-like rebound. Is it a last gasp or the beginning of a real bull market? Indonesia's crypto tax reform is a big deal. Miners are crying, buyers are laughing. Who will pay the bill in the end?
Thursday, July 31st, BitcoinTV English channel. Where is the coin chain? I'm Michael, starting with the 24-hour cryptocurrency headlines. Today, Federal Reserve Chairman Jerome Powell said the labor market is somewhat precarious, inflation remains high, but a September rate hike remains undecided, leaving the market on edge. Bitcoin's price plummeted to $115,000, like a banana peel. Within hours, however, the major players pulled it back, pushing it straight back to $118,500, shocking even the most experienced traders. The US dollar index DXY. The surge soon reversed, and risk sentiment rebounded slightly. Looking at the on-chain data, the old hodlers were very stable and did not sell. Instead, the short positions were completely cleared, accelerating the rebound. Now it depends on whether Bitcoin can hold steady at $118,000. If it can hold, the next challenge will be $120,000 to $12.1. Although the Federal Reserve is still playing Tai Chi, the market has already secretly written easing within the year into the script. The main players have no intention of running away, and their low buying actions are faster and faster. The Bitcoin futures market has finally calmed down. Previously, when the price reached 70,000 or 80,000, the red bubbles on the futures trading volume bubble chart, which indicates whether the market is in a bubble phase, were extremely hot, just like a leverage player's sprint. But now the price has broken down. 12. The bubble chart turned green, indicating that speculation has receded and the market has begun to rise in a Buddhist manner. This kind of market that does not rely on leverage is more confident. It is likely that spot players and ETFs funds and long-term investors are supporting the market. In other words, this round is not about who is aggressive and who wins, but who is steady and who laughs last. Unless there is any major negative news, Bitcoin may really hit the market next. 12.3. The US dollar has reached a new high of 10,000 US dollars. The market may really switch to the holding cash for retirement mode this time. Big institutions like to see this kind of gentle rhythm. Recently, the atmosphere on the chain has suddenly become lively. A number of Satoshi-level whale wallets that have been as still as a mountain for 10 years have suddenly moved. There is an old man who bought it around the year 3,962 bitcoins, stagnant for 14 years, are now worth $468 million, finally seeing a surge in activity online. In the first quarter of this year, 62,800 coins over 7 years old moved, a 121% year-over-year surge, a true testament to the old guard coming out of retirement. CryptoQuant also reported data showing that long-term holders have made an average of 215%, while still a ways off the traditional 300% clearance warning line. Some are already eager to lock in profits and exit. Think about it. Didn't the same scenario play out before the peaks of the bull markets in 2013, 2017, and 2021? This time, Bitcoin surged to $118,500. While it hasn't reached a new high, investors in older coins are already sharpening their swords. This is no joke. After all, money that hasn't been moved in over a decade is bound to have a bit of a market impact once it's moved. Please like and follow us to get the latest updates on the cryptocurrency, blockchain, and mining circles within 24 hours. Click the bell to join our channel and become a member. You can get your membership code from Monday to Friday. Recently, US policy has been very aggressive. The Trump administration supports encryption, and Congress is not far behind. In July, the stablecoin bill Genius was directly passed. Two other bills were passed, Clarity and Anti-CBDC. It has also passed the House of Representatives and is now waiting for the Senate to sign and seal. As soon as the policy was released, capital immediately smelled the sweetness. SocialValue's latest data shows that Bitcoin Spot ETF 5 monthly income $5,200 million, 7. The month was a record high with an inflow of $60.91 million. Total assets directly 1,527. Even better, the US SEC's crypto mom Hearst Pierce had already spoken out in support of the Bitcoin summit a month ago. ETF physical redemption, this wave of market conditions might have been sparked by her.
First made it through the SEC's process. It was not because the SEC was really enthusiastic. It was because the SEC was told by a court, you got to do this. And so we did it, but there were certainly some constraints put on that even at the time, people were saying it really would be helpful if we had in-kind. And so that's something that I've been...
United States SEC recently announced that Bitcoin and Ethereum have been officially approved ETF. The implementation of a physical subscription and redemption mechanism is no longer limited to cash settlement. This means that authorized securities firms and investment banks such as JPMorgan Chase and Jane Street Capital can directly exchange Bitcoin or Ethereum for ETF shares in the future. Chairman Paul Atkins and Marketing Director Jamie Selway said the mechanism would significantly improve market efficiency.
In-kind redemption simply means you redeem Bitcoin or Ethereum ETF. When you buy, you don't need to exchange it into US dollars, but can directly get the real currency back. ETF, you can only get cash in and cash out. If you want to get Bitcoin or Ethereum, you have to go to the market and buy it yourself. SEC. After the release, institutions such as JPMorgan Chase and Jane Street Capital can directly exchange currency for ETFs, can also be redeemed for real coins. This not only saves handling fees and slippage losses, but also improves operational efficiency. For the market, this makes ETFs closer to real currency holdings and also helps to enhance confidence and push up the price of coins. ETF. For example, if you buy a voucher that gives you coins, you can now actually take the coins home. Remember the Bear to the Bone period from 23 to 24 NFT. Is it a cold winter? Everyone thinks NFT it was so cold, and now it is this year, 7. In June, NFT daily transaction volume is still 200. It was hovering around 10,000 US dollars, but suddenly it soared to 26,000, 10,000 US dollars. Almost scared people, just like when Bitcoin and Ethereum rushed NFT, but don't be happy too soon. In the past 2 days, the number of daily transactions has increased from 10,000 straight down to 8,000 within. It was directly cut by 90%. CoinGecko. The data is also very distressing. 24-hourly trading volume fell back $1,610,000. The momentum suddenly lost power. NFT. What exactly happened? Is it a resurgence or a last gasp? The story behind this resurgence may not be as simple as you think.
This round NFT, the key to the surge in transaction volume is that a few blue-chip projects have driven high-priced transactions. In mid-month, the sales of CryptoPunks increased by nearly 590%, with a single-week transaction volume of 3,370 US dollar 10.0. With the reserve price raised to 20, Moonbird's floor price is more than 10,000 US dollars. 30 rising within the day 152.4%, about 1.7 Ethereum. Bored Apes weekly sales exceeded $580 million, growth 62.33%. The average daily amount on the Ethereum chain is NFT transaction amount, approximately 1940 US dollar 10.0, far exceeding Solana. Many analysts believe that the recent stability of Ethereum's price has increased. NFT, the pricing anchoring effect, also makes blue chips NFT become the preferred target for high-priced transactions.
Don't look NFT. The recent activity is actually not a resurrection of the monkey, but rather Ethereum's own recovery. First, large investors have secretly increased their holdings. On-chain data shows that in just 2 weeks, more than 200 tens of thousands of Ethereum have been deposited into major wallets. This isn't something retail investors can pull off. It's clearly the work of large capital investors. Secondly, stablecoins are being traded for underlying assets. A political project even used USDC to buy ETH, demonstrating that institutions are no longer clinging to the US dollar, but are instead shifting their focus to allocating coins. Third, NFT blue chips are reaping the benefits. Older projects like CryptoPunks are rebounding rapidly, demonstrating that the market is once again valuing established IP with a history, established community, and established value. This wave of NFT fever is just the appetizer. What's truly being ignited is confidence in the entire Ethereum ecosystem. Next, Layer 2 and AI chains are likely to take off.
While clinging to Coinbase, JPMorgan is lobbying for regulators. Is this a crypto whitewashing scheme? Indonesia's crypto tax reform is a big deal. Miners are crying, buyers are laughing. Who will pay the bill in the end?
Established financial circles are really going wild, turning the crypto world into a circle of friends. Citigroup is moving quickly, developing a cross-border, dedicated Citi stablecoin, and Bank of America is quietly getting its stablecoin project on track. Despite their previous pretense of superiority, New York Mellon, UBS, Deutsche Bank, and HSBC are all jumping on the bandwagon, either issuing stablecoins or embracing blockchain technology. Anyone with a connection doesn't want to be left behind. JPMorgan Chase is even more aggressive, with SIX having just launched its JPMD deposit token last month. It's now forging a strategic alliance with Coinbase. This time, traditional finance is truly dropping the ball and going straight to work on-chain.
Almost every Fortune 500 company is now coming in and starting to look at stablecoin payments. And so this is a big opportunity for us. It's a TAM expansion for our business. And we think that we can provide these wallets and payment APIs for really, the whole financial system and every company eventually.
The partnership between JPMorgan Chase and Coinbase will unlock a range of innovative services for customers. Starting this fall, JPMorgan Chase credit card users will be able to directly top up their Coinbase accounts to purchase digital assets. By 2026, the two parties will also achieve seamless account and wallet integration via an API, further enhancing transaction security and privacy. JPMorgan Chase Ultimate Rewards points will also be redeemable 1:1 with Coinbase, marking the industry's first points-based rewards program supporting crypto wallet top-ups.
JPMorgan Chase's move has a bit of a slap first, then candy vibe. First, they announced, "Want our customer data? Pay up." This immediately set off an uproar among fintech and crypto leaders. Then they partnered with Coinbase, acting like they were very open. This move not only soothed the market, but also propelled them significantly into the cryptocurrency world. A Chase spokesperson also mentioned plans to build more through trains, and they've even assembled a team, clearly not just for fun. This has financial veterans on edge. It looks like buying cryptocurrency will soon become as easy as swiping a credit card to buy coffee. Indonesia is a master of policy in the field of cryptocurrency. While enthusiastically waving, come on, it secretly tightens its regulatory belt. Just like the monkeys in Bali, they will come up to you if you have a banana in your hand, but pretend to be a passerby when you extend your hand. The latest plot is really ups and downs. First, there was a surprise seizure. World Platform. The reason is that this company secretly collected 50. The retinal data of 10,000 Indonesians is a vivid example of a real-life matrix. Immediately following this, the government announced a tax on exchanges and miners, perfectly embodying the policy philosophy of profiting, not taking the blame. Local crypto enthusiasts now face daily internal dramas. Before trading, they have to do the math. Will the profit cover the tax? They even have to cover their eyes when logging into exchanges, fearing their iris data might show up at a dark web auction. Miners are the worst hit. After finally getting a slight electricity price reduction, the government immediately comes charging them mining protection fees. This plot is more exciting than an 8 o'clock drama.
Paano sabi ng crypto itu sangat memudahkan kita untuk transaksi di mana-mana.
The Indonesian Ministry of Finance announced comprehensive tax adjustments for the crypto industry, effective August 1st. The income tax rate for crypto assets sold on domestic exchanges will increase from 0.1% to 0.21%, while transactions through international platforms will see a sharp increase from 0.2% to 1%. For miners, the VAT rate will double from 1.1% to 2.2%, and the 0.1% preferential income tax will be eliminated in 2026, with the standard tax rate being applied instead. The only benefit is for buyers. The 0.11% to 0.22% VAT on the transfer of crypto assets equivalent to securities will no longer be levied. The corresponding clause has been removed from Regulation Number 53/2025.
Don't underestimate this wave of tax reforms. For cryptocurrency players, it's a true multi-party squeeze. Miners have to spend their nights calculating whether there's still profit margin. Sellers are even worse off, facing double taxes and the need to worry about the government closing offshore tax havens, fearing they'll be targeted as soon as they sell. On the surface, buyers are the biggest winners, able to say, "Thank you, government," for the VAT exemption. But don't celebrate too soon. Sellers' increased costs will ultimately be passed on to buyers, won't they? The principle of the wool comes from the sheep never changes. Market activity may cool, but for the government, regulating the market while simultaneously collecting more taxes is a clear calculation. We'll have to keep an eye on the next wave of trends.
ETH whales have appeared. 3 newly registered users bought 73,821 ETH in just 8 hours, totaling $283 million. Could this be the result of a sudden late-night spree by a wealthy individual scrolling through their phone? Sun Yuchin is worthy of being the king of living in the currency circle. This time he will not play NFT. Directly book a ticket on Blue Origin's New Shepard to fly into space. Netizens commented, "Should we announce Mars next time? Turek's mining plan?" Following El Salvador's all-in Bitcoin move, Bolivia has also signed a memorandum to exchange regulatory experience. Netizens quipped, "One dares to teach, the other dares to learn." This sleeping god hadn't touched his account in 14 and a half years. He recently transferred 150 Bitcoins to an exchange, leaving 3,678 with a market value of $434 million. Netizens reacted with sarcasm. "This isn't hodling, this is hibernating until financial freedom." The U.S. Department of Justice announced that a Canadian man received a 365-day room and board package for NFT fraud. Netizens commented, "Only 1 year? Apparently the judge doesn't understand the pain of a rug pull." The scammer thought to himself, "I should have gone with meme."
Okay, that's the main content of today's program. Our channel focuses on valuable news in the cryptocurrency, blockchain, and mining circles, including news information and in-depth special reports. If you think our channel is valuable, you are welcome to forward and follow us. You can also become our member and receive the Member Wealth Code from Monday to Friday. Let's get rich together and add a zero to our assets in the bull market. See you tomorrow.